Hello, I'm Shaun Richards of Notayesmaneconomics. Today I want to talk to you about the Italian banks and the implications for the wider euro area economy. Let me give you the headline number which came out this morning. UniCredit, which has been considered to be the strongest, safest, however you want to put this, of the Italian banks, has borrowed over the 3 billion euros, but the interest rate is what it's had to pay is the thing that stands out, 7.83%. I'll say that again, just to ram it home, 7.83%. Now there are various ways of looking at this. One is just the simplest at these times of low interest rates, negative in many places. That's a hell of a lot. If we look back to the situation at the beginning of the year, this sort of bond for UniCredit had a yield on it of more like 1%. So there's been quite a jump, nearly 7%. And roughly, if we split this out, it's 50-50 between the actual changes in Italy itself. Yields have got a lot higher there. But the next bit is for the Italian banks themselves. So there's been a shift also in people's perceptions of them. Why is that? Well, personally, those who follow my updates will know that I always thought there was trouble there anyway. So there's a bit of catch up there. But also, they've been buying Italian government bonds through this period, and they've also held some in the first place. So the Italian banks have had a particular problem here, and that's what people call a sovereign bank doom loop, if you like. The country gets worse, banks get worse, which makes the country worse, and so on. Returning to UniCredit, this poses quite a few problems. Some years ago, I think it's about 7 now, I was on Sky News saying it was a zombie bank. The official view since then, it's going well, getting rid of non-performing loans, this sort of thing. Except that now, at these sort of interest rates, it has trouble. When you look at these types of secured debt, there are a way of sort of merging the zone between bond and equity capital. Why are they doing that? Well, if we look back, the previous peak for UniCredit was somewhere in the order of 370 euros at current values in the share price. It's 11.5 now. So that's why there's no rush to issue more equity capital. There's been plenty of that, and it's all losing, usually quite a lot. If we now widen that out and think of the wider Italian bank sector, then there's an even bigger problem. Those of you that follow it will know that one of the smaller lenders, Carige, has been sort of reshuffling its numbers, trying to redo its books recently. And it's got some money in, places of sort of the other banks have helped it out, but it still needs more to qualify under the ECB rules. And what's it going to have to pay for that now? Well, of course, more likely is it won't borrow at all. There's always issues around Monte Paschi needing more money. Ditto, what would it have to borrow at? You've got to be thinking now that it would have to pay in the double digits, 10, 11%. If we now move to the Bank of Italy, which did, tucked away in last week's financial stability report, hint at this sort of thing. These things are always honey-coated, sugar sweetened, however you want to put it, in the fact that the official view is always that things are getting better, a bit like the Beatles song, things are getting better all the time, except you also get the sort of John Lennon undercut in that particular song here, as we look around the fact saying, well, actually, a lot of things have got harder for them, now very difficult, and we're back to questioning their basic business model. From my point of view, if we move from the banks looking at the Italian real economy, then we get a problem, because how are the banks going to be lending? How are they going to be operating normally? And of course, that's normal for Italy, not perhaps normal as we might see it. And go through things like business lending. What's going to happen there? So there are a lot of questions. And this in the Italian economy, of course, is coming at something that had ground to no growth, 0% as it is. Moving to the wider euro area economy, we had the money supply numbers today. Now, they've worked really well so far this year. And in fact, it's been one of my signals of an indicator that works well. Mostly it's been ignored. And people look at, say, the purchasing managers indices, which mostly has got it pretty wrong. This morning's message was steady as she goes, except where you've got to be careful about this is it's steady as she goes at not much. What I mean by that is the sort of near-term indicator, or narrow money, M1 as they call it, growing currently at 6.8%. That's dropped back from double-digit growth that we saw in the end of the summer of 2017. A lot of that, because we are looking at narrow money, is the changes in operations of the ECB. A lot less QE than what we saw before. Dropped from 80 billion a month to 15.15 now. That suggests we're not going to see a lot of growth going forwards. Maybe not quite as bad as the third quarter. There are various factors dragging that down. But the trajectory ahead is maybe 0.3% as we wait to see what the next step is. It's a little bit better for broad money. There was a bit of a pickup there to 3.9%, and some of the past was revised slightly higher. But that gives us a forecast for quite a way ahead, maybe a couple of years. And what we don't know in that is how much of that will be inflation. So those trends, in essence, give us the same general pattern, which isn't very good. And this is what poses the real issue here for the European Central Bank, is that, of course, just as it's cut back to some extent its policy stimulus, the economy slowed up. So if you're sitting on the governing council, you're now thinking what to do next. I've been arguing for a while that Mario Draghi's never had any intention of raising interest rates on his watch. So that gets us to just about this time next year. Although some places have been trying to suggest that he will. And now, if we would get a further dip, you have to face the possibility they might cut again, or at least restart QE, or some version of the two. So they're at a bit of a crossroads. We don't know it'll be like that. The economy could bumble on as it is. Not much growth, but a little bit. A bit like really what we've seen in 2018 so far. Two lots of 0.4, then a 0.2. So 1% over 3 quarters isn't a lot. That begs quite a few questions here. We're back to the reform issue. Every single introductory statement from Mario Draghi has talks about reforms, claims there's been some, but then says we require more. And of course, then back to the same scenario. What has been done, and has the European Central Bank, by the way, it's oiled the wheels here and made life easier for everyone. Has it slowed that up? That'll be the question nagging away at them late at night now. And then, where to go next? They'll have some room, it looks like, for more stimulus, should they choose to do it. The oil price falling will take some of the inflationary pressure away, although they claim to look at core inflation. A reduction in the headline will allow them a bit more room to manoeuvre. With a slower economy, that's a possibility. Except, of course, we're then back to the big issue that's dogged the whole thing, that this is a sort of junky culture, and how do you ever get away from that? Hence the phrase, to infinity and beyond. So there's quite a few questions for them to think about. And of course, in the bank sector, later today we'll hear from the Bank of England about some of ours in the UK. They have their own issues. The Bank of England, of course, is always keen to cover that up, like all central banks are. But as we stand and we look forward, after a better spell, there are a lot of issues out there in the near term. And I don't necessarily mean Brexit here, because let's face it, so many things could happen. But the actual outlook as we look around, some people exaggerate and say that there's a recession or a collapse on the cards. That may or may not be true. But certainly a period of slow growth and not much. Thank you.